Right, good morning then everyone as we head into European trade on Tuesday the 18th of June. We'll have to look cross markets, see what's up, what's down after we've had the RBA out over the course of this morning. There's a few other things to go through, some Fed speakers later on, some retail sales out of the US, which we'll touch on in a minute, but we'll start with the RBA. Nothing too different from the RBA, kind of what we were saying yesterday, that inflation is still too high. It's actually going up in Australia over the last kind of few months. Quarter over quarter yearly inflation is still at 4% in Australia. So no chance for the RBA to turn any dovish, and they kind of reaffirmed what they said last time. Right, they said in the minutes at their last meeting that they had discussed the possibility of rate hikes. Again, this meeting they have discussed the possibility of rate hikes. So, what needs to happen for rate hikes to come to fruition? Q2 inflation data, right? So at Q2 inflation data, when we do get it from Australia, which shouldn't be too long, next month or so, we should watch that with a clean set of eyes. If that does go and beat consensus, there is a higher than 50%, you'd probably imagine, possibility of a hike from the RBA. Obviously, if that turns around and goes back lower in line with consensus, that reduces that need. But that inflation data does become interesting, and will be interesting. A couple of the other central banks starting to cut interest rates. If Australia go and hike interest rates, I'm not saying this sets off a chain of events, but it's something we can definitely keep an eye on. So arguably Australian dollar for here on out, I don't say for here on out, but certainly in the short term, you have to imagine a bit more bullish than bearish, which you can see Australian dollar is higher across the board, is the strongest currency in today's trading so far. The US dollar is a bit mixed, the rest of the currencies all a bit mixed. I mean, you would expect to see one of these red across the board, but the fact that there's not kind of just suggests to me that a couple of them are pretty flat. You can see Kiwi yen is just flat, and the two of them are relatively weak. I don't know where this currency pair has gone. That's reflecting yesterday, but anyway, that one seems a bit broken. But the Australian dollar stronger across the board, as you can see, all the way down through there. We'll keep an eye on that as we go forward, but do you want to go and jump on that now? Maybe not, but I do think Australian dollar, the fact the RBA talking about hikes, not even acknowledging the prospect of cuts, and cannot acknowledge the prospect of cuts, would say to me it's probably worth being long some Australian dollars. Euro Aussie shorts. ECB have cut interest rates. Might look at sterling. They're probably likely to talk about cuts a little bit later on in the week. If inflation tomorrow, certainly if inflation tomorrow misses consensus, I think short sterling Aussie is a pretty decent bet off the back of that. But we'll kind of leave sterling out of it for now. But and then you've got obviously the Japanese yen, which is pretty weak at the best of times at the minute. Stocks higher across the board. Again, no real reason, to be perfectly honest. I mean, European stocks having a bit of a bounce back. Don't get kind of lulled into this. You can see weak percentage change, month to date percentage change, super negative across Europe so far this year. So the fact that they are up, bit of a pullback against the trend. I wouldn't read too much into massive risk on trading in today's Asian session. But US stocks slightly higher, but again, we don't really need a reason for stocks to push higher. You do need a reason for them to push lower though, but there's kind of nothing going on. People will buy stocks, won't they? You can see across here, relatively mixed price action. You can see, your Aussie is popped higher, Kiwi sideways. Euro dollar having a bit of a grind higher, but had a super negative week last week, so a bit of a pullback against the trend is kind of to be expected. Maybe get some sort of a little flag in here for yourself. Maybe that's worth keeping an eye on if you are a trader of something like that. Sterling down here at the support level, we kind of had identified. It is through that trend line that we were looking at. This down here at the support level hasn't managed to break through it. It will be interesting to see if that does want to push back lower again, but. US dollars, across the board, relatively mixed. You can see dollar Swiss down, dollar yen up. Dollar yen's an interesting one. Had some hawkish comments, over the evening. You can see if you come back here. The article's gone. It was here. I can't find it again. I can't find it again. We did have some hawkish comments out from I mean, that's what I'm getting at. It was a bit of a stupid article saying there was some hawkish comments from the Bank of Japan, and it stemmed declines, which is not really the case when you look at this. So maybe that's why they deleted it off the screen. So you got to be somewhat careful with these data releases. But US dollar is not really sure what they want to do at the moment. A bit of a pullback. That's more Australian dollar strength. Keep an eye on your Kiwi, your Sterling. Dollar Swiss pushing low, which is an interesting one. You got the Swiss National Bank on Thursday as well. So we'll have a kind of cross that bridge when it comes to it type thing. But yeah, let's see how this pans out. But you'd have to imagine euros. I mean, it would make sense for these to continue short with the political situation in France, with the ECB cutting interest rates, with the Fed not being in a position to be able to cut interest rates. That will then bring us on to retail sales a little bit later on. They're expected at 0.2%. Now, consumer spending has been quite a large component of the US economy remaining strong over the last number of months and kind of year, 18 months. So the fact that this is back at zero in the previous month is not a great thing. I mean, you can have a look from where it is at, pretty good, kind of 2023, 0.5, 0.7, 0.8, a couple of good months, February, March. January was not great, but that's obviously kind of seasonal. I mean, you get people spending over the month of December, then winding back spending in the month of January. So that's not too much really for us to pay too much attention to. But April flat. If this trend continues and it goes negative, sorry, I keep yawning for some reason. If this trend continues and it goes negative, probably expect some US dollar weakness. But personally, I'd like to see this come in and beat consensus and start to push back higher again. And that would, for me, create, I think, better trading opportunities. Inflation is still not coming down in the US. They still have a lot more work to do with the other central banks cutting interest rates now. For us to try and find tradable opportunities, we kind of want the Fed to prolong interest rate cuts, kind of let the US dollar strengthen across a number of its peers that have started to cut interest rates. So that's where I think we get the best tradable opportunities from, and then we get a raft of speakers from the Fed a little bit later on. You've got 5 there, 6. You can see, so 6 speeches, pretty much one after the other. Markets or the news source will be like, we're waiting for these to speak, but ultimately they're probably going to talk a bunch of different things. So how can we really use that information? I'm not too sure, but that'll bring us into UK inflation tomorrow, but we'll cover that in the morning. But for now, RBA expected, or RBA talking about the prospect of interest rate hikes. So you'd have to imagine that the Australian dollar remains somewhat underpinned. You got final inflation prints from Europe. I wouldn't say they shake markets up too much. Economic sentiment again, I'm not sure they shake markets up too much. But retail sales at 130, we'll keep a keen eye on that 130. I hope for us a beat on consensus, maybe some US dollar strength to go against some of its peers that have begun to cut interest rates. But I don't say that with a massive level of confidence. Market's a little bit lackluster to start the week, but that is maybe to be expected after a pretty busy week last week. So maybe not the days to go throwing money all over the place. We do have some opportunities a little bit later on in the week. We do have UK inflation, we do have the Bank of England, we do have the Swiss National Bank. So maybe keep your money for a little bit later on in the week.